Good afternoon, everyone, and welcome to Corporate Finance Online Classes. This is Dr. Mahesh M. Monjeri, Assistant Professor from Department of Management Studies, SDM College of Engineering and Technology, Dharwad. So, dear students, now we have reached the last part of the syllabus, okay, in dividend decisions. So, as we are aware by this time that finance manager deals with three major decisions with respect to maximization of shareholders' wealth. The first one, investment decisions, investment in long-term as well as short-term assets. Investment in short-term assets, we call it as a working capital. Then financing decisions, raising capital for the purpose of investment, which can be borrowed from different sources of finance, so broadly classified into debt and equity. Then determining the capital structure, what proportion of the total capital should be debt and equity. And third decision is about dividend decisions. So let us continue our learning on dividend decisions and further understand what are the different factors that have influence on the dividend policy of a firm. So students, can you see the PowerPoint slides?
Yes, sir.
Yeah, thank you. So we have understood what is the dividend policy, and the next we are learning about the factors that determine dividend policy. Among them, so far we have learned the dividend payout ratio, stability of dividends, legal, contractual, and internal constraints and restrictions. What are they and how they influence the dividend policy of a firm? Now, today we are going to move ahead and learn the remaining three factors, that is the owner's considerations, capital market considerations, and inflation. Yeah. So when we talk about owner's considerations, taxes are the first thing that comes into picture. So a dividend policy of a firm may be dictated by the income tax status of its shareholders. See, when people or corporates invest in equity shares of a company, when they become equity shareholders of a company, these companies gather information about their investors or equity shareholders. So they can know what is the income tax status of its shareholders. If a firm has a large percentage of owners, means equity shareholders who are in high tax brackets, its dividend policy would seek to have higher retentions, because if more dividend is paid, the equity shareholders have to pay more taxes. If a large percentage of the equity shareholders are in high tax brackets, such a policy will provide its owners with income in the form of capital gains as against dividends. Okay, so it does not mean that company distributes less dividend or it does not distribute dividend. It distributes a dividend. Okay, so but they are again invested in the company, which is called as a capital gains. Okay, so dividends are declared. Okay, so out of which some amounts are invested back into the company business, which are referred to as capital gains. So why a company adopts such a policy? Since capital gains are taxed at a lower rate, so these capital gains are also taxed. Equity shareholders have to pay tax on the capital gains as well, but the tax rate is lower than that on dividends. That's the reason why this policy provides its owners with income in the form of capital gains as against dividends. So they are worth more after taxes to the individuals in high tax bracket. Now, why? Once again, why the company should be so much bothered about increasing the worth, okay, to the individuals? Because the ultimate goal of the financial management or corporate finance is shareholders' wealth maximization. Okay. So this is from owners considerations, means equity shareholders considerations. If they're in high tax bracket, okay, they will get gains in the form of capital gains, because capital gains are taxed at a lower rate than dividends. Dividends are charged at a higher tax. Okay, so whatever earnings the equity shareholders get will be of more worth, okay, if they obtain them in the form of capital gains. Then the firm should not retain funds. Okay, the firm should not retain funds if the rate of return earned by it would be less than one which could have been earned by the investor themselves from external investment of funds. So a company should not retain funds. Okay. Under circumstances where if these equity shareholders have other investment opportunities, and by investing there, if they can earn more rate of return than this company's return on investment, then the company should not retain dividends. They should distribute the dividends to the equity shareholders. These equity shareholders will invest in other more profitable investment projects. So overall, the wealth of the shareholders will be maximum. That is the goal in the end. Okay, I will take your questions once I complete. Just 2 are remaining now. The fifth factor that influences the dividend policy of a firm is capital market considerations. Yet another set of factors that can strongly affect dividend policy is the extent to which the firm has access to capital markets. Access means how easily a company can raise capital. In case the firm has easy access to capital market, either because it is financially strong or large in size. See, those companies that are financially strong means, if you observe their history, past data, year after year, their sales and profits have been growing continuously, consistently. Or companies, okay, that are huge in size, huge sales revenues, like let us say Fortune 500 companies. Walmart is the best example, world's largest company, largest in size. It can follow a liberal dividend policy. So if a company is financially very strong, its credibility will be, okay, its credit status will be very high, its credibility will be very high in the market. And also due to its size, like Walmart, they can very easily raise funds from the capital market, long-term funds. So such companies can follow a liberal dividend policy. They can distribute, okay, higher dividends to their equity shareholders, because if this company needs funds for the purpose of investment or reinvestment, they can easily raise such funds from capital markets. Why it is easy for them to raise capital easily? Because they are financially strong or they are large in size. Okay, so that's about capital market considerations. But okay, what that has got to do with those companies, okay, that are not financially strong or that are not large in size. Okay, so such companies try to distribute a smaller dividend and retain a greater amount, okay, out of the retained earnings, so that out of the earnings, so that they can reinvest them into their business. So this is how capital market considerations affect dividend policy of a firm. Yeah, that's what I explained. However, if the firm has only limited access to capital markets, maybe it is smaller in size, or okay, it is not financially very strong. So such a company is likely to adopt low dividend payout ratio, because such firms are likely to rely more heavily on retained earnings as a source of financing their investments. Just now, what I explained. So this is about capital market considerations. So any questions so far?
No, sir.
Okay. Okay, can anyone give example of large size organizations in India, and those are financially very strong.
Sir, Reliance.
Yeah, Reliance Industries Limited. Yes, very good.
Jindal, sir.
Jindal Group of companies. Okay, very good. Then
Sir, Tata, sir.
Tata, excellent. Okay, Tata Motors, we know. Okay, Tata Motors is in loss in so many years, but still the company is not closed. Think about a smaller company. If it run into losses over a period of time, like 5 to 6 years, it will be closed. Okay. So these companies are able to raise capital easily from the capital market just because of their financial strength or the size of the company. Okay, then the last one, the last factor, inflation. So let us learn, okay, how inflation influences or affects the dividend policy of a firm. So if you look at all these factors, the finance manager, okay, so he simply cannot be like that wedding horse in India, which vision is okay blocked from both the sides. It can only see straight. So if a finance manager only by hearts the concepts, okay, he or she first of all will not be able to become a finance manager, okay, a finance candidate. And even if somehow he becomes, let us say his own family business, he won't be able to take a correct decision. So there are so many factors, internal and external to the company. Among external, okay, so there are market factors, environmental factors, then economic environment, political, legal. So all these factors now we are studying together that have an influence or impact on capital structure of the firm, working capital requirement of the firm, or dividend decisions of a firm. So I told you that is why in MBA, students are made to learn many subjects. These all subjects are interrelated, right? From semester 1, first subject, till your semester 4, last subject. Okay, so the one who blends them properly, retains them, and understands their application, okay, so we'll have a bright future in corporate. So let us go ahead and learn how inflation influences the dividend policy of a firm. With the rising prices, so I hope by this time you are aware what is inflation. Okay, inflation is a situation where the prices of the goods and services continuously rise. Okay, so I read you a couple of news articles where we learned that the Indian inflation is one among the all-time highs, and government is struggling to control. We also learned about some measures that are put in by the government to curb inflation. Then with rising prices, funds generated from depreciation may be inadequate to replace obsolete equipment. So here, okay, first understand this concept. Okay, say for example, there is a machinery which the company has purchased today. Okay, and let us say its price is 1 crore rupees, and the life of the machine, for our ease of understanding, life of the machine is 10 years. So straight line method, company will keep 10 lakh rupee depreciation. Okay, so 10% depreciation is done on the machinery. So 10 lakh rupees per year. So they create a sinking fund and transfer 10 lakh rupees each year for 10 years. So at the end of the 10th year, the sinking fund will have 1 crore rupees or any such form of type of fund. But after 10 years, okay, if the inflation in the economy continues or the inflation prevails even after 10 years, the price of the machine, will it remain same even after 10 years?
No, sir.
Yeah,
No, sir.
because due to the rising prices, that 1 crore rupee machine which is purchased today, after 10 years, it might have become 1 crore 10 lakh, 1 crore 20 lakh rupees. So with the funds generated from depreciation at this rate, you will have only 1 crore, whereas the price of the machine would have increased to 1 crore 20 lakh rupees. So you will have 20 lakh rupee deficit. So it's a simple example. At a layman level also, if I tell you, like about 2 years ago, for example, okay, so if I would have given you 80 rupees, you would have purchased 1 liter of petrol. So today, if I give you 80 rupees, that 80 rupees today, can it buy 1 liter of petrol?
No, sir.
Yeah, okay, it is because of the rising prices. The price of petrol has increased to 105 rupees or maybe beyond that. So if this is the situation, these firms have to rely upon retained earnings as a source of funds to make up the shortfall. In my example, where the company has purchased the machinery for 1 crore rupee, and after 10 years, okay, the life of the machine ends and the company has to replace the machinery. But in the funds, okay, they will have only 1 crore rupee, and the price of the machine has increased to 1 crore 20 lakh rupees. So from where the additional 20 lakh rupee will come? So company will take 20 lakh rupee from the retained earnings as a source of funds to make up the shortfall, so that they can purchase and replace the old machine with the new one, so that the production continues. But when they take out 20 lakh rupee from the retained earnings, to that extent, okay, less dividends are distributed to equity shareholders. So how inflation, okay, reduces the amount of dividend distributed to equity shareholders. Okay, with this example, we understood. This aspect becomes all the more important if the assets are to be replaced in the near future, immediately after 2 years, 3 years. Consequently, their dividend payouts tend to be low during periods of inflation. So immediately after the next 2 years, okay, the company has to replace the machine. Then the previous 2 years, the company will announce lower dividends. Okay, so that's all what we learned about dividend policy and the factors that determine dividend policy of a firm. So a finance manager is required to know, understand, okay, these factors that have an influence on the dividend policy of a firm, and use that information and his knowledge to take a correct dividend decision. Because a correct dividend decision is important to maximize shareholders' wealth. Because maximizing shareholders' wealth is the ultimate goal of financial management or corporate finance. So if you can recall, chapter 1, class 1, I began with saying that the goal of financial management is to maximize shareholders' wealth, wealth maximization of shareholders, and exactly we ended with the same. Okay, now over to you. Any questions you have in particular about dividend policy, this chapter, or in general, any question about unit 1 to unit 6? Okay, if we can interact a little bit, okay, that will be good, because this is the last class. And yeah, next week also we will have only 2 classes, 13th and 14th. Because as per the academic calendar, your last working day was 14th. Yeah, you think if any question you want to ask, okay, and you note down the question in your notebook or a piece of paper if you have. In the meanwhile, I'll take attendance, and after the attendance, I will address your queries. Okay. 31 students are there, okay. So Abhijit, Abhishek, Alain, Amrut, Anagha,
Present, sir.
Anusha Kautekar,
Present, sir.
Anusha Achari,
Present, sir.
Anushri,
Present, sir.
yeah, and then Ashwini, Asra, she is present. Bharti is present, okay.
Yes, sir.
Then sorry. After Asra, it was Swati.
Yes, sir.
Balappa. Bharti is present. Okay. Chinmay,
Present, sir.
Deepa, Dodda Basaya, Ganesh,
Present, sir.
Kiranna, Shrikant,
Yes, sir.
Karthik,
Sir, Karthik present.
Lakshmikant,
Yes, sir.
Manjula, Manjunath, Manjunath. No. He is
Present,
present.
sir.
Yes, yes. Muttava, Nagamegha,
Present, sir.
Raj, Nagashri,
Present, sir.
Sakshi, Pawan, Pavitra,
Present, sir.
Pooja Ballari.
Present.
Yeah, congratulations. You have maintained a 100% attendance. Pooja Ballari.
Thank you.
And there are many who have 53 classes out of 54. Okay. Pooja GN,
Present, sir.
Pooja Kadam,
Present, sir.
then Purna,
Present, sir.
Pradnya,
Present, sir.
Praveen, Puneet, Rakesh, Ruchita,
Yes, sir.
Keshav, Sahana,
Yes, sir.
Samiksha,
Present, sir.
Sanjana, Sanjana is absent. Sankalp, Sanket Kumar,
Yes, sir.
Shilpa MN,
Present, sir.
yeah, Sahana is present. Then Shilpa Ganji,
Present, sir.
Deepa is present. 1 minute. Okay, then Shiva Kumar. He was
Sir
present.
is present, sir.
Yes. Shruti,
Present, sir.
Saurabh,
Present, sir.
Srujana,
Yes, sir.
Suman,
Present, sir.
Sumuk,
Yes, sir.
Sushmita, Swati Pola, Tabassum, Uday Kumar, Vaishnavi, Varsha,
Sir, she was present, sir.
Varsha is present. Vedesh,
Present, sir.
Nishad, okay. Okay, anybody who skipped their attendance?
So Irana.
Iranna. Okay, after Iranna, sorry,
Sakshi.
Sakshi is present. Okay.
Sir Karthik.
Karthik. Karthik is marked present.
So Sanjana was present, sir.
Yes, Sanjana.
Sir, Sankalp, sir.
1 minute. Sanjana is marked present. Next, Sankalp.
Yes, sir.
Sankalp is also marked present. Okay. Next,
Ashwini, sir.
Ashwini. Okay, Ashwini is marked present. Next, anybody else?
Tabassum.
Sorry,
Tabassum, sir. 56 roll number.
Tabassum. Yes. Yeah, anybody else? Okay, now I will request few students in the absence of both the CRs are absent. So some students, okay, to share your feedback on the classes of corporate finance. Okay, you can take 2 to 3 minutes or 1 to 2 minutes. Okay, right, beginning from the copy of the syllabus which is shared in Google Classroom until today's class. This video also will be shared in Google Classroom. Okay, PowerPoint presentations already I have shared. So who, anybody, any volunteers? This is how we conclude classes. We can talk about how you learned, what you learned, what are the unique methods adopted. Okay, any suggestions for semester 3 like that? Yes.
Sir.
Kumar, yes. You can please.
Sir.
Yes.
Kannada ಹೇಳ್ಬೋದ್ರಿ sir.
ಹೇಳಿದ್ವಿ, no problem. 1 minute, just 1 minute.
Okay, sir.